What's going on, guys? Welcome back to my channel. It's Dr. Ambitious here, and in this video I just want to quickly show you guys how you can get the best entries possible on your trades. And the pair I'm going to be looking at for this is no other than gold. So we're looking at gold right now. We're looking at it from a daily time frame. I usually start my analysis from the daily time frame. It's called the top down analysis, right? Some people call it doing the macro analysis. Then after doing the macro, they do the micro analysis to get the best entry possible. So in this case, we're going to be doing the macro analysis to determine, to see what's going on a bigger time frame, and we'll look for an entry on a lower time frame, such as the 1 hour time frame or the 15-hour time frame. So right now we are looking at gold on a daily time frame, and the first thing I like to do is draw my key levels. The key levels can be the support and resistance or the supply and demand area. These are key levels where price always react from. Maybe not always, but sometimes price usually react in this area to determine the next market movement. So in this case, I'm going to focus on the most recent data. So gold overall, we're seeing a very bearish market, but if you're looking at the recent uh, activities going on, it's quite bullish over here. So now I'm just gonna draw my key levels. The first level I'm gonna draw is gonna be over here. This can be called an area of resistance because price is just bouncing off this area and then dipping down. And then when price got over here, it was also used as resistance. And then over here, the price became a level called the support level. And now we can call this area a dynamic area because it was used as both support and resistance. But if you're to take this all the way back to this area over here, back in July 2020, this area was also used as support. So you don't want to ignore it because over here as well it was also used as support. So this is a very significant level that is not to be ignored at all. So now that we have that down, let's draw the next key level, which is going to be over here. So if you had caught a buy trade over here, I would be looking to take profit over here because there's another significant level over here and price is likely going to react of this area. So let me just make this cleaner. Let me make it cleaner. So there we go, guys. So now I have two levels, and usually I like to draw one more just in case. I'm just gonna put it at the bottom here. So this is another level of support, and if you draw it all the way back, it was used as support quite a number of times over here. At least 4 times this area was used as support. So I have 3 different key levels going on here, and I want to show you guys the trade that I actually took this week. It was a very sniper entry trade, and I feel I shared with you guys. So on a daily time frame, we really got what we want to get. Over here was where I entered the trade, and I'm looking to take my profit right here. So let's see why I actually got into this trade and how you guys can spot such moves in the market. So we've established this area as an area of resistance in the past, which was broken and was retested, and now the area is being used as a support area. So now, the moment this area got broken, I'll be looking to go long on this pair. And before I go long, I would like to look for an area of demand or supply. If I'm buying the market, I like to look for an area of demand. If I'm shorting the market, I would like to look for an area of supply. So in this case, I'll be looking for an area of demand anywhere around that resistance area, or this area that I've already called dynamic area because it was used as support and resistance. So this will be my area of demand. A demand area is uh, let's say the last bearish candle before price pushes up, we can call that a demand area. As you can see over here, there's a last red candle over here before price finally pushed up. So there's multiple areas you can actually call demand. There's another area over here, but in this case I would like to use this area because even this area was being used as a mini support area because you can see here 1 2 3 4 5 6 price has been reacting of this area and even over here. So this is a very significant level to take the trade. So I'm just gonna remove this, and so this is how I plan to take this trade, or how I took it rather. So this was my entry, So last week I actually took this trade somewhere around here, and this was my stop loss over here. And the moment price got to this level, I got out. So I was able to get a 1 to 2.6 risk to reward. But a week after, I see price was still accumulating in this area, and it's giving me another opportunity to enter the trade. So what did I do? I got in again when price came all the way down to this demand area. So oftentimes we will see price playing around the buy area multiple times. Over here we saw price pushed up, came back into it. So if you are early, you could have gotten over here, and if you have the guts to hold your trade until this level, you can do that. But you really don't have to if you've made enough money from the market. So we see price pushed up again, came back, pushed up again, came back. So we can see 1, 2, 3, 4, almost six different opportunities here the market is giving us to enter this trade, and this was the final chance it gave us before price finally took off. So I got in over here on a Monday morning, and my take profit was it's right here. So as you can tell, I'm still in this trade right now on one of my trading accounts, and the moment price broke this level, I started to look for another opportunity to enter. So this is a strong area of we can call it a minor resistance area where price just refused to break this area after 1, 2, 3, 4. So I call this area a price zone, which is where price which is a zone where price just refused to break, and under that price decides to accumulate. So I was waiting for price to just finally break this area, which happened over here. I was waiting for any kind of retest back into this area before looking for another entry. And like I said, before looking for another buy entry, I like to look for demand areas. So over here is another demand area, which is very sweet. And what I will wait for is for price to break this structure to validate this demand zone. And the moment price broke the structure and came back here, I was looking for another opportunity to enter, which was right there. That was my entry, and my stop loss was right here. Now I'm in two positions on one trade. I mean two trades on one position. I don't know if that's how you say it. So it's one pair, and I'm in two positions for that same pair, and they are both running in profit. So these are the two trades that I took this week. This is gold, and this is how I was able to get sniper entries on this trade, and this is how you can do it as well. Just focus on the key levels. The dynamic levels are more stronger because they were both used as support and resistance. Focus on the demand and supply area. So this is a practical example of how you can combine demand and supply and support and resistance, and merge it together and formulate your own strategy. So I hope this video helped you guys. If you like this video, please give me a thumbs up, and I will make more videos like this. And let me know in the comments what you think about this trade and how you can use it, to better your own strategy. So I'll see you guys in my next video. Don't forget to subscribe and give me that thumbs up. Thank you.